Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video, I wanted to compare two of the main themes that I think are driving the market this week. Now, you might look at this and say, well, how can you say that there's two themes, which to me are range-bound trading and next Tuesday's election, when we sit right on top of the FOMC announcement that is due out tomorrow? Well, I don't really think that FOMC announcement is going to do anything. I think it's primarily going to be noise, but in light of that, let's talk about a couple of the other ideas. The first thing that I think you're going to see that is plainly obvious when you start looking at this chart of EA, who is due to report earnings, and I haven't even looked at the report yet. I just want to discuss this with you fresh, and just like I've been covering it, as I've been thinking it as I walked into earnings. Well, the first thing I want people to think about, because in my mind this is a bullish stock, I mean that's an easy comment to make, right? Here's a high and a low, higher low, higher high, and the process repeats. So it's a very basic chart. But when I look at this, I do start to notice the confluence of the tree line with the 200-day moving average. And then when I remove my studies, the first thing you're going to have every single person that runs a chart show you is this trend line. Okay, so let's extend this out to the right. And you'd say, oh man, if it breaks that trend line, it is all over. Well, I prefer to look at markets a little bit different. And to me, symmetry is much more important. So swing high to swing low. And taking that from the 8607 high, this is where I really started to have some interest in the potential of it pulling back down into this price. So you show your studies now that you've drawn the symmetry, and notice the amazing confluence between the decline that preceded the rally in relationship to the 200-day moving average and symmetry. So even if this trend line breaks, I do not think it's all over for EA. I wanted to have a study or a setup where if it fell back down into this zone, I would be okay. If it rallied, I would be okay. You say, how do you do that? You've got to be at one point where something is going to hurt. Well, absolutely. And if you don't find that, you know you're really in a spot where you've got to run from. But this is what I ended up setting it up on. So 77, 75, 73 unbalanced fly. This gives me a very favorable break-even price. Back down there just a little bit below 74. So what I need to see with a strategy like this is that essentially we come back, we do one of two things, or one of three things. We can either trade sideways and make money, we can trade up and make money, we can trade down into 75 and make money. And you say, well, how do all of those work so well? There's got to be a caveat. Well, there is, and that is if we get hammered, then this strategy will lose money. But when you look at that type of order flow or that type of idea for price, and then you couple it with a strategy like this, I think that's the best way to put yourself in the best of both worlds, and that's what I will be following with EA tomorrow. And then the other place that we've been discussing some strategies was here with Amazon. So on a trade like this, and especially as you look at a weekly perspective, I just think this is such a good one to talk about because yesterday I put on the trade that involved the short $800 call. You can see that right here. And then when we had this movement this morning, right out of the gates, Amazon was pretty strong. Came just such a beautiful technical example and why I always keep these broad moving averages on my chart. What a beautiful respect of that 50-day moving average and immediate rejection. So I did tack on an additional spread based off the exact same idea. The only difference is I tacked on $2.50 to my call option, brought the puts up by $2.50. This helps center my delta to ideally keep it as close to zero as humanly possible while enhancing my theta, and that's the way you try to build a position into an expiration. So those are the two main themes that I'm working on for this week. I will continue to work on them into Friday regardless of the Fed, and then we'll see what the election brings on Friday. Speaking of the election, we do have the Trade the Election event, which if you guys haven't heard of it by now, I don't know what to say about that, but if it's something you're interested in and you haven't had the opportunity to sign up now, two of my favorite traders, not to mention a whole crew of people, it's primarily going to be John and Raghi, but we've got a whole big group of the team that's going to be speaking on this Tuesday, November 9th, November 8th into the 9th, and if that's something you're interested in, you will not find a better place to find educated, exciting, kind of light-hearted commentary on the election. That's where I'm going to be. I hope to see you there.